some basic jargons of planning. So examples I have taken over here from our day-to-day life. The objective, the takeaway for today's session is to make you familiar with the hefty keywords. We use a lot of sugar-coated complex keywords, but behind the screen, they are very simple concept. So the same thing I said in the past, planning and budgeting is a part of your day-to-day life, where you learn the art of correlating those complex keyword to day-to-day life. It's a natural way of learning. You don't have to artificially, learn from somewhere outside. So let's take one simple case. This case, from today till end of our training, we'll refer this case in every second class, right? So end-to-end solution building. Let's understand the problem statement first. So the problem is very simple. I need to calculate travel expense. Travel expense, my personal travel expense. Okay. So September is going on. I am calculating for October month. So when I'm calculating for future month, so obviously it become forecast. What is forecast for future expenses, isn't it? So this is our forecasting of travel expense. October month travel expense, isn't it? When I commute to my office, this is a personal planning, simple example. I have two mode of commute. I have a car and a bike, isn't it? And planning and budgeting is all about controlling cost. It's a cost controlling mechanism. And all those companies who fail to do this job, their their bankruptcy is inevitable. They'll go to bankrupt for sure. And you see around this is happening all around you. Big Bazaar, JP Group, Jet Airways, Syntex, such well-established company, 70, 80-year-old, huge group of companies are going to financial distress, right? So that's not just an Excel sheet. If companies seriously devise financial planning, they can avoid those problems. So we have a very tiny example. I have two mode of travel, bike or a car. What happened? Every month I reserve certain budget, approved budget, because I want to control my cost. I said every month I can spend 4,000 rupees I allocated for my travel expense. I allocated, so the term we use called approved budget, or the logically I kept some money aside for certain types of expenses. So this is approved budget is $4,000. I need to calculate what is my travel cost. Okay. So I created two scenario. What if I travel by bike? What if I travel by car? Correct. This term is called scenario modeling. We'll keep on using those words. So the distance from my office to home is 30 km one side. Then I have travel. So you see, I use two different color, white and gray color. The white color entails data input is allowed. I can input number. And the gray colors are read only for the sake of our understanding. So the distance from my office to home is 30 km. So the total distance I travel in a given day for my office commute is 60 km. I go to office and come back. 30 divided by multiply by 2. Simple mathematics, right? When you write a business logic or calculation for this, same thing we are going to use it. Correct. If I travel by bike, my bike mileage is 60 km per liter. In 1 liter fuel, I can drive 60 km. So in one day, how much fuel do I need? Simple calculation again. The bike mileage, the number of kilometer I travel. So every day I need 1 liter fuel, isn't it? In my city, the fuel unit price or petrol unit price is 106 rupees. It's a unit price. And it may change, therefore I put in a white color. Planning is all what if it changes. In a given day, in a given month, I traveled 22 days in a given month. The one thing I skipped. So how much fuel do I need per day? The fuel unit price is 106 rupees and I need 1 liter fuel. Simple, I need my daily commute cost is 106 rupees. And in a given month, there are 22 days. In October 2025, I assume 22 days, right? Because October has a Diwali, there are 2 days off, I can make it 20 days, and so on, isn't it? So depends upon the way I input, the calculation will take place. So there are 22 days and I need 1 liter fuel every day. So simple, in a given month, my bike requires 22 liters of fuel. Trying to calculate cost of 22 liters of fuel, that is my monthly travel expense, or other way around, my daily travel expense multiply by 22. This is my monthly travel expense. Now look at over here, how much budget I allocated, 4,000 rupees, and how much I spent. This is actual, this is allocated budget, or you can also call this is allocated budget, this is my projected forecast. So if you're a CFO of any company, you always wanted to see the variance or variance. So why Big Bazaar failed? Why Jet Airways failed? Why JP Group recently is going to financial distress? So there are many factors inevitably. The one factor for sure, they were not good at doing variance analysis, right? So the money what is allocated and money what you spend, this is under budget, correct? Because I'm spending less than what money allocated to me. So I underutilize budget. Why 1668? CFO always wanted to see this. So if you look at, I go to images.google.com, okay, and CFO variance analysis dashboard. This is what CFO wanted to see. Any dashboard you pick up randomly, any dashboard randomly, okay. This is always CFO wanted to see. So if you're not too sure what is your requirement, uh, pick up any dashboard on the fly. You see what is our revenue decline, previous month, last month, gross profit, and there may be a segment for variance. Look at there's a variance. How much money you plan and how much money you spend, the variance. This is something very common every CFO wanted to see. So now you learn three keywords, right? First is variance, which is actually a difference between your projected forecast versus budget. In our case, or how much money you forecasted versus how much money you budget. This is variance. And the data which you input over here, this is called drivers. And the entire planning is driver based planning. Why? Because if I change any one of the driver, my expense will change. What if fuel price is become 110, from 106 to 110? This will change. Look at here. Previously it was 2,300, now it is 2,420. Variance is also declined. If I continue change my travel expense, unit price of fuel, my variance is declining and my expense is increasing. Or if I decrease or increase number of days, because this October may we have a Diwali and there are 2 days off, obviously I'll travel less days. So my travel expense will decline, isn't it? Or if I use my bike mileage changes or number of kilometer change, anything I make, you see things will take place over here. So as numbers are changing in our planning context, this is called driver-based planning. This is called variance analysis and driver-based planning. And the one where I can input number, they are also called assumptions. Assumptions, right? Because based on our assumption, we're performing calculation. So our first assumption was here bike. The mode of travel is bike. What if I travel by car? If I travel by car, all the assumption will remain same. The distance from office, obviously, if I travel by car, the distance is same, I assume. But my car mileage is 15 kilometer per liter. It means to commute 60 kilometer, I need 4 liter fuel every day, right? And fuel unit price is same, 106 rupees. So in one day, my daily commute cost is 424 rupees, right? Number of fuel I need in a given day, multiply by fuel unit price, fifth class mathematics, and I commute 22 days in a given month. So the total fuel I required 22 days multiply by fuel required per day, 88-liter fuel I need. And the cost of 88-liter fuel is 9,200, 328 per unit price, multiply number of fuel you need, multiply of this. So I mark with red color. It entails my budget is exceeded. The money I allocated and the money I use is exceeded. This is exactly what happened to Big Bazaar, JP Group. What happened to them? They kept on acquiring company. They kept on taking loan out of their greed. When they kept on acquiring company and taking with certain projection, they made certain forecasting. The business will grow by X, Y, Z%. But it did not happen, and they kept on acquiring company. And their loan, bank loan, kept on mounting up. As a result of this, their interest expenses exceeded their revenue. If you're earning 100 rupees and you're paying interest of 120 rupees, obviously you go bankrupt. Obviously, it's simple thing. This happened. So you must be surprised how come such a big companies, these companies are running by super talented people. They have been doing this job for past 50, 60, 70 years. Still they do mistakes. There are various factors, but one factor is for sure, right? They were not so good at or probably overlooked at the planning part. So this is planning. Okay. Now the problem over here in this, if I travel by bike, I'm underutilizing my budget. If I travel by car, I'm overutilizing my budget, right? And I can't travel by bike every day because there are other factors. I have a backbone. I have a backache problem back. I don't want to travel bike. I want a prudent combination of bike and car. How many days I can travel a bike and how many days I travel by car. And here comes the advanced mathematics, right? Regression, right? So I make it very simple. I would like to say the number of days I can travel by bike and a car. Therefore, I don't either underutilize my budget or overutilize my budget. So overutilize is obviously out of context. You are spending more money than money you have. So I put as directly a combination. This is also called what if scenario. I put it over a number of days I travel by bike and number of days I travel by car. Okay. I use a combination of it. What if the number of days should remain 22? What if I use travel by bike 17 days and 5 days by car? I make it 16, 16, 4 and 6 days by car. If I do this combination, then my expense is 2,400, 4,240. I'm exceeding my budget. Exceeding, right? So that's not a good idea. If I travel by bike 17 days and 5 days by car, then 22 days and my I'm underutilizing my budget. Okay, it's 78. Should be actually other way around. B14 minus B22. Here I'm overutilizing budget. See, 16, 4, 6. See, I'm running out of budget by $240. I'm running short of budget by $240. So when you do planning in budgeting, there are possibilities of using as advanced mathematical calculation as well. There's an example of simple regression. So every business in the world, all your discussion is moves around variance analysis, driver-based planning. Imagine I use only one type of expense. Corporate have tons of expenses, 100 kinds of expenses. And with simple Excel sheet, I can drive this solution. Okay, let's advance this example. Okay, add one more clause in it. Imagine I got a job offer from another company. I got job offer from another company. with a salary hike of 5,000 rupees. Correct. But the problem over here, my new office location is further 15 kilometers away. So previously office was 30 kilometers away. Now it is 45. Right. Now the next example, this example is another class of what if scenario. A decision which companies have to take into their day-to-day life where planning come into picture, which I am giving it over here in the context of your example. So you got a salary hike of 5,000 rupees, but before you take up this offer, you would like to do some financial analytics, some financial calculation, isn't it? The problem over here, you need to further travel for 15 kilometers extra, correct? So now the new calculation is based on 45 kilometers one side and 90 kilometer. Roast, all the parameters are same. But here the problem is that because I'm commuting 90 kilometer, my per day fuel requirement increased from 1 liter to 1.5 liter. And my daily cost, how much it was? My daily commute cost was 106 rupees. And now it is 159 rupees. You see that cost increased, right? The cost increased, so my monthly travel cost also increased by bike. So what is the increase? Increase, let's calculate what is increase. Extra money I need to pay if I travel by bike. What is that simple difference of this? So extra money I need to pay my extra fuel expenses 1,378 if I travel by bike. If I travel by car, the extra money I need to spend 5,936. Simple. I use car calculation, isn't it? So if I get a salary hike of 5,000 rupees, the effective salary hike is not 5,000 rupees, right? This is the salary hike I got minus effective salary hike is 5,000 minus additional money I'm paying to commute by bike. For car, forget about it. We already in negative loss. So this is effective profit. Effective profit, you see this term used extensively, right? So company when companies when take up new project, buy new assets, right? This is also used in capital expense planning. Before company buy new asset, hire new employee, dispose of asset, they need to take this kind of calculation. And this job is financial controller. Academically, you learn this in CFA. What people learn in CFA, right? Conceptually, we do the same thing practically over here. I have tons of Excel sheet, beautiful scenario. This is a simple case. So this is my effective salary hike if I travel a bike or a car. Okay. Further, we take this example to the next step. If I ask in one simple word, what does CFO wanted from the solution? CFO, budget controller, the team we work under. I mean, you guys are going to work with a team called FP&A, financial planning analysis team. So Oracle planning or any vendor planning, just planning and budgeting solution to be used by the department is called FP&A, financial planning and analysis team. From a academic course of point of view, CFA, the people who work on executive MBA or investment planner, sorry, something went wrong. This is the team. Under this team, there are different job roles. The job role is called planner, budget manager, controllers, group controllers. They are called financial controllers, director of finance. We are going to work with this team. funding manager. These are different job roles. You're going to work with them. So all of them, their key idea, they always wanted to see expense and revenue. Planning is all about controlling money. Rest everything you learn, there are fancy stuff or marketing gimmicks. Everything is a money, right? So business wanted to see obviously revenue, expenses, statement, profit loss statement, balance sheet, and cash flow. And you can also prepare balance sheet for your personal purpose. From a accounting rule, logically it may not make sense, but for the learning purpose, this is good. So what we rendered right now, it is an expense. You also have a revenue element as well. Okay. Planning has three types. Planning type. We discussed few minutes before, that is called driver-based planning. Why? Because anything I'm changing, any input you change, the calculating on the fly. I change distance from home to office, or I change fuel unit price, or I change number of days I travel. Anything I change, system calculates my total expense and variances on the fly. This is what business want to see. Therefore, it is called driver-based planning. That's one type of planning. There's another type of planning which is actually basic planning called direct data input. What is this? It is nothing. It is just a replacement of Excel-based planning or spreadsheet planning. So before you means Oracle EPM guys come into picture, the business people would have been using planning into Excel, and they have been using for past 10, 20, 30 years. When you provide the same functionality in Oracle, Excel kind of function, that is called direct data input. Very basic. Rather than you calculate this number, you manually input all these numbers. Direct data input. Third type of planning is trend-based planning. Now, there could be tons of possibilities. There could be hundreds of keywords, but in Oracle context, trends, right? All of you know the term trends. Okay. When you're planning based on trends, it could be any factor. Now imagine I have two basic trends over here. Which month is going on? September month is going on, right? It means, let's, for the sake of simplicity, assume today date is 1st October. Assume today is 1st October. It means from January till September, I have got actual data. Actual data, I'm sure you understand. Actual means the one come from source. This data come from ERP. This data is coming from ERP, okay, which I mark with gray color, right? And yellow color I mark with, or green color I mark with. This is my forecast data. Actual data you cannot change. It is read only. It's a historical data, right? You cannot change it. For FY25, I have got how many months? 9 months of actual data, which I mark with gray color, and remaining 3 months of forecast data I am forecasting. How? Different way of forecasting. There are different way of trend. One simple trend I use. Current year actual average. Current year is FY25, actual and average. So I take an average of simple Excel sheet of January to September. This become my October month forecast. Correct? My October month forecast is simple, an average from January to September. Some corporate use a different vocabulary. Some corporate call this 9 plus 3. Right? 9.3, what 9 plus? See, there are a lot of vocabulary used. 9 plus 3 entails 9 months of actual data. January to which month? September actual data. And obviously October to December forecast. Some corporate use this vocabulary 9 plus 3. Some corporate call V10, version 10 forecasting. So there could be tons of other keywords and jargons. Even if I spend my all life, rest of my life doing this job, still I cannot cover it because it's very subjective to the business, right? It is subjective to the business. So that is your different term, current year actual average. Okay. Now there's one more trend, current month actual. So I copy paste this number again over here. And delete this. Delete. And this is my forecast. October, November, December. This is just example. There will be 10 of 100 ways. Current month actual average. Which month is current? September month. Correct. So I'll take October month forecast is September month actual. See that? I'll take October month forecast is September month actual. That is like that. Okay. It is also possible that you perform certain adjustments. Okay, I say current month actual forecast adjusted by 5% inflation rate. The inflation rate is 5%. Current month actual adjusted by 5%. It means my October month forecast is September month actual multiply by, I use inflation rate 5% over here. This is my driver. So my mathematics calculation is September multiply by 1 plus, right? All of you have done this calculations in your school days. There's nothing high-end trigonometry or any complex calculation I am doing. Integration, differential, nothing, simple mathematics. So September month actual plus I inflated by 5%. So why I call adjusted by? Because if I make 5 to 10%, right, my forecast is changing. So you will hear a lot of time, I would say a term called forecast adjusted, right, as you change your inflation. So one more thing in the same context, I'll tell. This is a process, right? This is not technology. The first day I said one thing, to learn Oracle planning, you don't need any training. This is UI driven. You can buy 499 rupees video, udemy.com, and you can learn on your own. That is not a big deal. But that is learning is only navigation. Oracle has given this trend, but the reason behind this trend is not given. Because when Oracle documentation was prepared, the objective was, or the assumption is that you already know business processes. That is what people do not know. Therefore, they are brick in a wall. Okay. So many businesses, this is what they do. Every year end or beginning of the year, let's say this FY25 year end for I'm doing profit planning or travel expense planning. This is what I did. For FY26 for next year I am doing travel expense planning. Now imagine these are travel expenses. This is all my travel expense, actual travel expense. These are my travel expense. These are not actual, these are forecast because this is for FY26. The moment I say future period, automatically is a forecast. I need not tell you this thing. This is FY26 forecast. So many businesses, what they do, They allocate some numbers in the beginning of the year, and this term is also called forecast seeding. Forecast seeding. You see term seeding, and in my case, we made seeding is very simple. What was my FY25? This is FY25 actual. FY25 actual, I simply copy this number over here, right? From previous year, I'm copying this number. You see that? I simply copying this number, right, from previous year. And then this is my forecast seeding. I'm starting in the previous year, FY25. Then I'm doing some adjustment. Now, adjustments based on different factors. A basic factor I use adjustment for inflation rate, right? And inflation rate I'm recording by month. By month. It could be by year, right? So I use inflation rate by month. So January month, I'm sure you guys, when you look at newspaper or television, you see our unemployment rate, inflation rate, right? These rates are, they are fluctuating by quarter or by month or whatever. I assume it is by month, and I'm manually inputting the inflation rate, right? I'm manually inputting the inflation rate. This come from various, the inflation rate come from various external governing factors, or they are called economic indicators, right? So I manually just randomly inputting some number. These are my inflation rate, isn't it? And every month I get inflation rate. So this is my initial forecast. This is my initial forecast. And then month over month, I'm adjusting by inflation rate. So my initial forecast plus adjustment rate, inflation rate, sorry, right? You see that? So some companies do forecasting like this. Beginning of the year, they allocate previous year actual, and they use various economic indicators to to drive their forecast. So adjusted forecast, I would write adjusted forecast. Okay. So now another term I use, forecast seeding, right? There are 10,000 ways of doing it, 20,000 ways of doing it. Right? This is just one example. And every business does it in own way. Healthcare business. I'm sure all of you have heard of this. In India, healthcare and education business has got 10% inflation rate. Your children fees is increasing by 10%. But vegetable has got 4% inflation rate, 3%. Rent in Bangalore is 12%, something like that. So we'll take an average of it. So we define three ways of trending we discuss, two ways of trending. Current month actual average and current year actual average. And then we use forecast seeding, right? So what I do, see, as I said, our solution is subject to the business. It is not a one standard rule. I give you FAQ, you mug up this FAQ and you pour out in front of customer. Now you become a planning consultant. Everybody, every time people ask me, give me FAQ, I say I don't have FAQs. It is not, there's no one way of doing things. When you start working into planning, you need to ask customer to provide you this information. And I always say a smart consultant is not one who is good at planning. In my view, one who is very good at programming, one who is very good at Oracle planning, great programmer, you're excellent in Oracle planning skill. That is only one aspect of it. So to be a good consultant, how smart you are in capturing requirement or rather making your business user work. And this is not just I'm teaching you for the sake of training. I follow this practice. Okay, I'll give you a lot of scenario in future, but I show you I follow this practice practically in my life. So up to here it is simple, right? Now let's create more. This is one part of the story. I'm going to create at the end of the day, what do you want? At the end of the day, what do you want? You want your profit loss statement, cash flow, and balance sheet. So I create a very basic profit loss statement, very, very basic. We create a profit loss statement for your thing. So profit loss statement, we have revenue and we have expenses, isn't it? So I put over here, I'm writing this in a simple language, may not be aligned with your accounting rule. Okay. So sources, for example, if I created my profit loss statement, okay, I put over here net income, isn't it? So for me, there are two sources of income. Income from training, right? Income for training. I'm putting some imaginary numbers. Okay. Income from salary to income, the income from brand. Right. They may further be based on drivers. So my salary is almost obviously subject to the number of days I go, right? I may have a driver over here as well, which I'm not using for the sake of simplicity. So first driver, my training, it depends upon what? Number of students, isn't it? The more student teach, one driver. Salary depends on number of days I attend office, right? Rent may be subject to the rent per square feet. There are certain drivers. For the simplicity, I use one. Okay. Then I put net income. Under this, I add one more member. Come. Then I put expenses, different type of expenses I've got. Travel expense I calculated, I would call operating expenses. Correct. So operating expense, I would in my context, maybe utility expense right now. Utility expenses. So first utility expense is electricity bill, electricity, what else? Electricity, travel, expense, and so on. I put some number over here, electricity bill, which is also based on driver. See, I'm creating a hierarchy as well. Okay. So I put a driver over here. The electricity bill, I'm trying to help you visualize how your solution is going to build. So for electricity, the driver is number of units consumed, cost per unit, multiply cost per unit. Travel expense I just now calculated few minutes before. I'll put it over here, the one I calculated. Travel by bike. Where is that travel expense? This is my travel expense. So I got income, I got expenses, I'll calculate net income. Okay, or now you can add more element taxes. I put tax over here. This is my profit before tax. Rather, I calculate profit before tax. Then I apply tax over here, isn't it? My tax, I'm making very simple, flat 30%. So profit before tax. How much? First I calculate total expense, utility expense. Obviously, sum of travel plus electricity, right? My income, total income, sum of these three numbers calculated, right? So my profit before tax is what? Income minus expenses, profit before tax. Then I'm applying tax on top of this multiply by 30%, I'm making constant. So tax profit after tax, profit before tax minus. So why you guys are planning, you are a programmer, why are you learning this thing? This is mathematics, this is account. Why? Because how would you write a rule? You need to write a calculation rule. How would you write? How would you create an hierarchy? Excuse me. Until you know those keywords. So I got profit after tax. This is what so my profit is subjective to my driver, right? Now look at this. I take a screenshot. This is my profit based on my driver. I put a profit loss statement here and put a driver or assumptions. assumptions, right? This is my assumptions. Based on this assumption, this is my profit loss statement, correct? Now I'm going to change my assumption, any assumption, right? I change my assumption. I change my fuel unit price from 106 to 110 rupees. My expenses increased, inevitably, expense increased. So my expense increased, obviously my profit after tax will decline. This is happening, profit after tax decline, isn't it? Decline. From how much it is, 106, whatever it was previously, profit after tax, it must have declined by some numbers. So what you see, this is called driver based profit loss statement. This is my future expense, right? It was 6,067, declined to profit after 6,006. Do you see that? I did just one example of travel expense planning. In corporate, there are thousands of expenses, there are thousands of source of revenue. So as your driver changes, your profit loss statement changes on the fly. This is called driver based profit loss statement. And you're forecasted. Future profit, you're calculating your future profit, any of the driver you change, right? Now, I'll take you one step further. You calculate you calculate your profit loss statement. You can also calculate your cash flow. All of you may not understand this example, but that's fine. We'll discuss about this in greater detail. Yeah. So I put over here balance sheet. Okay. We make it very, very basic balance sheet, very, very basic balance sheet. So a balance sheet consists of, I mean, you don't understand accounting rule, but you are understanding numbers, right? I have got total assets. Okay. So I have got total asset. Under this, I've got current asset. So in a bank account, I've got 1,000 rupees. So I have a cash in bank, cash in bank. My bank has got 1,000 rupees. Put it over here. In my pocket right now, I've got 50 rupees. So cash in hand, I've got 50 rupees. Okay. Current asset, non-current asset. So right now I'm sitting on a chair and I have a table and a laptop, non-current asset. So I put what I have right now. So I've got furniture of some some rupees. I have a laptop. This is what I have with me right now. Okay. Then I have liabilities, right? I have a short-term liability, right? So I have short-term liability. I have taken personal loan of 500 rupees, and I have long-term liabilities. I have a home loan. Home loan is also based on driver, right? We discussed yesterday. Home loan of 1,000 rupees, XYZ number. Okay. Then I have owner's equity. Owner's equity, all of you, many of you are trading in share. The money you pay, this is a very buzzy word in your business. That is owner's equity. The owner's equity has got various elements. Okay. It has common stock. Don't have to bother about all of them. There's one element which we are need to concern, what is called retained earning. See, it's a natural English means retained earning. Whatever you earn in a company, okay, where the profit goes into at the end of the year, the profit you earn, you give this profit to your investor as a dividend, correct? Or you keep this profit in your pocket. When you keep it in your pocket, this is called retained earning. I'm keeping simple. Either you whatever profit you earn, either you pay as a dividend or you keep in your pocket. That term is called retained earning. Now imagine in your company, there's no, you are the sole owner, you're the only owner, right? Then I don't have to give dividend to anybody. So let's assume this clause. I'm the sole owner. Amit is a 100% owner of DISP. I don't have any stakeholder. So whatever money company will earn, it will go to my pocket only, right? It will go to my pocket. So I put some number over here. So retained earning actually come from net income, right? And we'll see this practically as well. I'm just giving a big picture. If you don't remember rule, no problem, absolutely no problem. Why I'm telling you this today itself, today's first, second class, because throughout your course of learning, entire at the end of the day, every day your business wanted to see this graphically, net income to retain earning. And you need not to be a financial analyst to know this concept. You are using in your everyday life. I am the owner of the company. Whatever company earn at the end of the day, it goes to my pocket. You see, I don't know finance. I haven't studied this in my academics, but I use finance in my everyday life. Net income I calculated, and this goes to retained earning. Correct. Now see this live here. Our first exercise in planning application is this example only. Correct. So your balance sheet formula is balance sheet. Our number may not match. Okay. Total assets minus total liabilities plus owner's equity. This is a simple formula. So I can create my future balance sheet. This is future profit loss statement, right? This is October month profit loss statement. October 25, isn't it? This is October 25 balance sheet. I can create a future balance sheet. Customer buying your product for this purpose only. Total asset, I'll take a sum of this. Sum of, first I check total current asset, total current asset, total non-current asset, total non-current asset, total asset, number may not match, okay? Doesn't matter, I am just concerned about logic. This is total asset, total liabilities, short-term liabilities. I have only one short-term liability right now. Where I see this? Long-term liabilities, sorry. This long-term liabilities. So total liabilities, sum of these two numbers. This, comma, this. So I got asset, I got liabilities and owner's equity. Sum of this, comma, this. We'll see balance sheet total asset minus total liabilities plus owner's equity, right? Now, whatever number your balance sheet comes, it doesn't matter. I'm going to, for the sake of testing, I'm manually increasing my asset to make my balance sheet 0. Okay. So I need to increase asset by 6,156. 7,000, how much it is? Manually calculate. 6,156. 7206. As balance sheet becomes 0. Now see this carefully. Right now your balance sheet is balanced. 0, right? The moment I change driver, my balance sheet will be changed on the fly. Right? Change the driver. What is your driver value right now? These are your drivers. That is why your balance sheet is this. CFO wanted to say this thing only. Right? I'm changing my driver value again. and see what happened. This become driver based planning. Let's change our driver value. So I change my fuel unit price increased by 120 rupees. 120 rupees. My travel expense increased. Copy paste this. Okay. So my driver value change, my balance sheet would have also be changed automatically and immediately. Immediately, balance sheet change and it is out of balance now. Okay. So whatever you are doing right from day one to day last, your ultimate objective is to do this one expense change. You remember first day I said, right? When I buy 100 rupees vegetable, 100 rupees vegetable, at the same time my mind start visualizing profit loss and balance sheet and cash flow. My mind is trained in such a way that one transaction helps me to build a in my mind I can create balance sheet. So the moment you're changing one driver, your profit loss statement is changing. You can render your future profit loss statement and you can render your future balance sheet as well just by changing driver based planning. This is the entire driver based planning. Future cash flow, future profit loss statement, future balance sheet. This is what you're going to render. You do financial planning, expense planning, revenue planning, workforce planning, capital planning, project planning, sales planning, procurement planning, any planning in the world, any plan in the world. At the end of the day, people wanted to see this. Now, the concept what we discussed, we are going to do this live, practically. Practically, we build application from zero and do this live, correct? So this is a simple case. Planning is all about this. If you look at entire Oracle documentation, not even a single case given in this way. Why? Because Oracle documentation objective is not to teach you how planning works. Oracle documentation objective is to teach you how application works, right? They are good at data. But all these complex terms without examples and use cases, very difficult to understand, right? So in 1 hour, we build very basic profit loss and cash and balance sheet structure with only travel expense. Then you have tons of other expenses. Everything is going to impact your balance sheet. Correct. So we are going to see this live, okay, practically with our application. That's our tomorrow's plan. Tomorrow we start with give you Oracle planning UI walkthrough, what UI look like, and we start with create application. When I create application, we have a problem statement handy. Without problem statement, when you create application, it is like a robot. You are doing a 10 mouse click and application ready. You don't need, right? What skill you need? 10 mouse click, 10, 15, 20 mouse click, application ready. You don't need to be a programmer. So we can keep the travel expense planning as our requirement and build the entire application. That's our tomorrow class objective. You guys might have seen your email. I sent you a foundation course of planning and budgeting. It is done in Excel. It is recommended but optional. So when you go through this Excel base, all the complex keyword, jargon, scenario modeling, what we discussed, you will learn in Excel, and then you can work on any product. You can use Oracle, SAP, Workday, OneStream, doesn't matter. Any software product you work, absolutely no difference, because problem statement remains it. Navigation part may vary. That is step one. Then step two, we're going to do it tomorrow. Create application, and when we create application, we are going to create we are going to create questionnaires. First questionnaire, implementation questionnaires. right? The outcome from tomorrow class. We have questionnaires. We'll start user manual, right? You have requirement traceability matrix. Requirement traceability matrix. What your customer want, you have a track of it, right? All those content. While creating application itself, I'll tell you. You will do it, right? I won't give you output in the first day itself. I want you to do hard work. After 2, 3 days, then I give my questionnaires. If I give you everything ready-made, then your creativity gets killed. But once you try 2, 3 days, then I give you my questionnaires. I give you template and you can fill it subject to your project. That is our plan. Okay. So this is very interesting subject. Do you like it? If you don't like it, it's become so boring. You have to fall in love with it. Either you fall in love or you will force to go out of it. Not today, tomorrow, 1 year, 2 year, 3 year, 5 year later. You cannot grow in this stream. That's it. Any question anybody has?
This the introductory training course that you said, is it sent as an email?
It is sent over an email to all the people who have got registered. So if you haven't received it yet, maybe your registration process is pending, or maybe you did it yesterday night and I couldn't see this one of this possibility.
Okay, I'll check with Mohit on that.
Sure. Any more question? All right. So the scenario which we did today in Excel, this travel expense planning, I kept into shared location. I show you where you can find all these cases. I mean, the changes which I did it, the updated one I put into shared location. So in your Google Drive, you guys have to be attentive for this. So you go to Google Drive and go to shared with me. There you see various folders. You see various folders, something like that. You will see folders like this. So I put a folder called homework. Let me see where is that. The folder I put a homework where I'm putting all the stuff. Let me search here. So day-to-day activities, I put it over here. This is, yeah, this under documentation. So travel expense planning, the one I prepared, the older one. I'll overwrite this, delete it, and put the latest one we did. So in the same fashion, as we proceed further, you will see a homework on a documentation. In every training I take many of time I take different examples. Daily notes, documentation, Oracle budget policy I was discussing today, right? When you start how your real life budget policy document look like. All of them are real projects. I massage them, mask them. So you can see video tutorials, class recording, here, documentation, homework, daily notes, exercises, lab exercises, PPTs, class notes, reference, then video tutorial for on-premise and cloud, case studies. The case study I am going to give it to you. The solution of these case studies, okay, automation, tons of customization I did it, custom planning, case study solution, electricity expenses, the one we discussed, or we discussed travel expense. Similarly, one more case study I did it for a previous batch called electricity expense. So like that, you have got different videos, session plan day by day. You can see this in your Google Drive. Yeah, we have tons of hundreds of cases for business school, hundreds of cases. In cloud, there are business schools starting from basic salary and headcount allocation. In fact, complex IAS and IFRS compliance, huge, very, very complicated business rule I have written. Fortunately, I am very good at writing calculations. And some industry standard, the calculation which I have written, it is opted by Oracle as a template. That is our level of comfort. And it is globally adopted. So there's a rule called IFRS 11. So joint venture I have written. Oracle opted is a template. A lot of calculation examples you have. As we proceed further, I'll keep on suggesting you in which order you're supposed to learn. All right, I'm closing. If no more question, and we meet tomorrow. Thank you.
Thank you.